from my house to yours. Welcome to EMS at Sea Level. I am joined from Bavaria by Rainer Koppitz, CEO of KATEK. Rainer, always a pleasure to chat to you. We haven't spoken for a while and we're into the new year, into 2023, and I was really fascinated to read your trends and predictions for the year. And I wanted to start with the impact on pricing of what we're seeing in the economy, because I think it's been something that people are concerned about. I know the pendulum is perhaps swinging a little bit on the purchase side towards the buy side on components, but there's lots of other dynamics affecting pricing.
Yeah, that's absolutely true. And Phil, that's pretty much to the point. I think there are two major, let me say, things or topics which will determine, the agenda of the electronics industry in this year 23. One of this is the cost pressure, and then we can cover as well later the component shortage and the new shortage of production capacity, especially labor. But with regards of the cost pressure, it's maybe the most urgent and most critical thing. Because if you miss the moment as an electronics provider, you probably get into deep shit. Okay, because I mean we have in all fronts we have now the increases of the cost. We have it in energy, we have it in salaries, we still have it in some components, and then because of the salaries and the inflation trends, we have it almost in all cost factors at the same time. So if you are weak in order to compensate with other cost optimizations on another side, or if you are weak or maybe even feel weak and don't dare to go to your customers and ask them for a price decrease, and not only ask but really kind of put a lot of pressure on the table and say, I mean, you need to accept the price increase, because if not, I cannot deliver you anymore. I mean, if you are not in a position or you don't feel in the position to do this, you will get into some kind of really bad situation, which will further bring the profitability down on one side. And on the second side, it will further reduce your cash reserves, which are already reduced because of the high inventory. So that's, I think, the most critical issue every electronics company has to cope with now. And I mean, this already started last year. But I mean, the beast is that, all the price increases we've done so far, I mean, it's not enough. I mean, this was a starting point and everybody was looking right. I mean, is it enough or is it not enough? And in most, industries and with most products, you will realize that it was not enough.
Yeah, I think what's really interesting, Rainer, is we talked last year about the component shortages and how that had affected your relationship with the customers. And there seems to be a bit of a changing dynamic between OEM and EMS, between brand and manufacturer. And I think that can be a very positive relationship. And if you can have an honest and open communication and you can talk about prices, but you can also talk about capacity, I think OEMs have realized they need to get ahead of this and they need to have capacity locked in. That kind of comes to your second point of risk of capacity shortage. OEMs need to lock capacity in now, otherwise they're going to be at risk of not being able to find manufacturing capacity later in the year.
Yeah, that's totally true. And here we have, I would say, two trends, or maybe even three, which kind of all pay into this capacity problems. The first one is that, and yes, the components crisis is kind of becoming better and better. We still have problems, but I mean, if you compare it with half year ago, I mean, it's paradise. Okay. so and also all of your customers, they do know that. And they let you know that now, once the component shortage is over, they accept that, all of the backlog is going away all of a sudden. So now you have the components. You always thought the problem is the components. Now the components are there. So I'm expecting to reduce the backlog within the next weeks or month. And honestly speaking, and that's what we are continuously telling into the market, it's not going to happen. It's not going to happen because we have the same situation with each of the customers, and everybody is expecting that the backlog is shrinking now like butter in the sun, and that's not gonna happen. So at the same time, everybody's talking about recession, and some kind of recession might be there. We can
touch on that
later. But still the demand is very big. Is huge. So especially in the growth industries, the book to bill is by far beyond one. So the backlog is the tendency is that the backlog is even further increasing right now, rather than decreasing. And if you then take into consideration as well that in all of the countries, and it's not just the Western European countries, we have the same problem in Canada, we have the same problem in Eastern Europe. The war for talent is back, also in the blue collar area. So you don't, even if you have the machines and the production capacity, it's very, very difficult to get the qualified workers right now in order to increase the capacity, on short notice. And those three pillars, they come together and form a house which is not really nice to look at, as it tells all of us that one of the key issues we have to resolve is the capacity issues here. And there's one thing which we've done right. I think we decided mid of last year to not fill our factory in Leipzig with a lot of new complicated clients, but to have a certain capacity reserve of something like 40%. In order to be able that once the component shortage will ease, to ask our customers of other factories, or to give them the opportunity to agree with kind of a switch to Leipzig of certain products or certain modules. So we can at least to our best customers and the closest customer offer them some kind of solution. But that's just kind of a let me say small part of the solution. The other part of the solution is, of course, that we all need to think about more automation, much more automation, and how to better plan together with our customers the capacity needs for the future.
Yeah, I think you're absolutely right with those two things. It's how do you manage to grow capacity without growing your workforce, which is both necessary through talent shortage, but is also necessary in terms of competitiveness. And how do you build a relationship with the customer where they can actually say, let's actually firmly book this capacity, because they've got into the habit of having to place orders for their for their products a little bit further out. They've got in the habit of having to turn predictions into purchase orders. So it makes sense for them to be able to do that. I just wanted to touch on what you'd mentioned about the easing of component shortages and what that means in terms of reduced inventory and hopefully reduced work in progress. Are you seeing that change in your balance sheet position with respect to inventory, WIP, cash cash deployed in that way? Is that improving, or is that slower
Yeah,
to
yeah.
improve than you
So
expected?
yeah, good. That's a good question. So my prediction end of quarter three was that, we will see that the further increase of inventory in quarter four will be, maybe, a small one, but there
Hmm.
will still be increase of inventory, because we don't see that, the big easing is happy. It's just kind
Yeah,
of first positive tendencies, which was true, but we implemented, I would say, extremely strict and harsh, management. We changed completely the way how to plan inventory and orders with our suppliers, and
yeah,
bring our customers into the boat, etc. And we implemented this, in most of the entities in the meanwhile, and the result is that we will see a slight reduction in inventory even in Q4 now,
good.
which is not in the double percentage area, but which is still significant.
Yeah, and the
So
start of
we
a trend,
see,
one hopes.
yeah, the trend one. So the trend is our friend here, absolutely. So we can show that we can convert the easing of the shortage situation now in inventory reduction, and
Mm.
we need to make, we need to set all measures in place in order to make this a kind of continuous, kind of improvement process
Yeah,
now,
yeah.
also over the next quarters, which we've already implemented. Yeah,
Yeah,
right.
and I think everybody in the industry needs to do that. I think,
Yeah,
the amount of cash that's been sucked into the industry to manage work in progress, and
yeah,
inventory is massive. And perhaps some companies have found that easier because they've had larger cash reserves, but everybody needs to
absolutely.
treat that as a problem and deal with it, because if there's an
Yeah.
easing in component availability, that bloat has to be fixed for the industry to remain agile and capable.
Absolutely. And there's an interesting thing, Phil. We've all learned a lot. In the past, how to, how to, let me say, plan, which material you are ordering, etc. This was all, relatively simple. Then we had the component shortage, and we all realized that on one side we need to build up strategic buffer stocks with the, most rare components, and on the other side there's kind of unplanned inventory increase, because you order everything because the demand is there, and then one single component is not arriving, but all the rest of the material goes into your stock
Stays
and
in
you have to
inventory.
pay.
Yeah,
So
yeah,
this was the second phase, and this is why the inventories are so high right now. And now
yeah,
we are in the third phase, and we are realizing that the systems, how the traditional electronics companies are planning their demand and ordering on the base of, they are always assuming that they have unlimited production capacity.
yeah,
So that's the second one, and to adjust this in the systems and the processes, and to realize that, even if the components are there now, you don't have unlimited capacity. So
yeah,
you have to continue to not order everything, which the customers are ordering, or bringing into your order books. That's the third step now, and every week of delay in order changing the processes, how to do this, is further increasing your inventory. And if
yeah.
we would have realized this a little bit earlier, the reduction of inventory in Q4 would have been even much, much better. But
Yeah.
you are learning every day.
While you're learning on the fly, I think what's fascinating, when I look at KATEK, is that the entire history of the business from its foundation has been during disruption. So you were forged in the fires trade wars, pandemics, component shortages, and now in economic disruption. So nobody's perhaps more able or more prepared for that. You haven't seen many years of stability, so I think that's interesting. One of the things before we get on to the economy that I wanted to talk about was that you talked about opportunities for the bigger European players, and I think you were emphasizing that there are greater opportunities for this kind of A team within Europe. And my sense is that when OEMs are looking at these long-term relationships, they do feel that need for scale. They don't feel they can switch around and chop around, perhaps in the way they used to. But we've also got dynamic of some more regionalization, perhaps a European manufacturing renaissance as a result of that, which we have to support with additional labor and automation and all those different things. Do you see there are kind of unique opportunities that are specific to that, maybe that top 10 of European EMS players?
Yes, there are. I mean, there are because more and more the customers, they are looking for really reliable, stable partners. So all of the major trends, we are seeing, and I call them, pockets of pleasure, as a this is really something where, if I could look into the future, I'm seeing this extremely positive because of those pockets of pleasure. And one of them is really this relocation trend, friendshoring, reshoring, whatever you will call it. I mean, as almost all major companies in Europe and also in Northern America are discussing to bringing more of the production and the sourcing back to the home market due to very understandable reasons we all know. But if you do this and if you go this step, you don't want to go into another insecurity, meaning that you give this to a small, shaky company. You want to see someone who has a very high resilience and can go through the further crisis, whatever this will be. So this is why the top electronics, the top EMS companies can take advantage of this if they are rightly positioned. And the same is true with the tendency for further outsourcing. I mean, I had a lot of interesting talks with customers which are still doing certain parts of the electronics in-house, and other parts they outsource. So they have a direct comparison, how, for instance, we or also other players in the electronics market managed the crisis compared to how they managed the crisis. What's the access to the direct access to the top suppliers? Do they have access to the best brokers in the world, etc., etc. So what turned out was that, with many of those customers and even companies which are not our customers yet, we offered them our help for literally no money to help them to solve their supply chain issues. So they all realized that there must be a better opportunity than quasi like doing as a hobby their own electronics, development, manufacturing, SCM, etc. So this is kind of I think the crisis was a compelling event to many I asking their troops, does it really make sense to do electronics on our own? And again, if I'm then now saying, okay, let's consider outsourcing, I mean, to whom to go? You go to, again, the larger, the stable companies, which have already outsourcing references and have already proved that they are able to steer the outsourced businesses through the rough waters. So that's the second one where I say, and the third one, by the way, the third pockets of pleasure is the huge backlog that everybody in the industry has right now. Because what we see is that unsatisfied customers, because you are not able to digest the backlog and show, a kind of a solid plan on how to reduce the backlog within the next quarters. And if you don't come up with because you are maybe a single plant, kind of a cash poor small company, I mean, then they go to other, they shop around, they look for other alternatives, and again, they go to the bigger, the more stable, the more capacity-rich companies, because their assumption is, and they are right, that they are much more easy in order to increase their capacity, in order to onboard new customers in this situation. So that's why I think the right positions, electronics companies in Northern America, but and also in Europe, they will have a very nice future if they do some things right.
Yeah, and I think they can. Yeah, I think they can clearly benefit that, and you're in a great position to benefit that along with them. So if I unpack that, I think, when I look at the top 10 or the top 15 or whatever that number is, in Europe, I would expect them to grow, and I do expect them to grow. When I look at the performance of the top 10 in the last year, we've seen some very impressive organic growth, for one thing. The other thing I would expect as a result of that is that continuation of consolidation that you've mentioned, because as those top 20 companies grow in their power, they are going to want to add capacity, and the natural target is going to be the companies between 25 and 100 as you go down the list. You mentioned that you expect more consolidation in the industry, but not just in Europe, also European companies venturing more to the US, as you have with Canada and North America, also to Asia, not specifically China, or maybe specifically not China. But there's that desire to continue that growth and also to look at the global strategy.
Yeah, that's true. I mean, what we see is just first of all, that's all right. And I think if you are dealing with customers in Europe, with larger customers, and I mean they are all doing a lot of export, and they have also their factories all over the globe. They proactively ask you on what can we do together in Northern America or in Asia. I mean, so that's very, and this kind of even accelerated. So you need to be there, and I'm absolutely happy that we successfully did the Canada deal already last year, that we did the signing with Nextech in Alabama. Which is nice, and now we have to go through all the governmental approvals, because I mean that's kind of defense, aerospace, etc. This will take a few weeks more, but I mean that's the right step, and more to come. A little bit more difficult is, honestly speaking, the Asian one, because we had some deep discussions with some really big EMS customers in Europe, and they tend to say that you need to be in China. Because
China's a big market.
Yeah, exactly. It's a big market, and they say half a year ago they would have said, or maybe 1 year ago they would have said, I mean, okay, you need to be somewhere in Asia. This could be Thailand, this could be Malaysia, this could be Vietnam. But I mean, now we really need partners in China. So this means on one side, there are a lot of also Mittelstand companies which are rethinking their investments and their production capacities in China, and they are moving away from China. On the other side, some suppliers of the really big European players, for instance, in automotive, they might be forced to stay in China or even move to China, because the new kind of paradigm there is that those players want to have suppliers in mainland China, Because if
Yeah.
everything goes wrong and you have maybe even discussions with Korea and wars here and kind of restrictions there, they want to be absolutely be sure that their factories in China can further produce because they have suppliers in mainland China and
Yeah.
not outside the wall. And I mean, that's a very interesting trend as well. So while many are moving out of China, there are others like us as well, looking for a good opportunity in China.
Yeah.
And we will see where this ends.
Yeah, I think it's fascinating. And I think, part of that regionalization, we talk a lot about decoupling with China, but part of a good global regionalization strategy is manufacturing in China for China. So, it's a market that your customers are in, and it's a market that you must be in. I think China's position as the factory for everywhere else in the world has somewhat changed. And I think that's something that's a little bit different. Last thing I want to mention is which is the last thing you mentioned in your predictions, the small caveat, which is the economic outlook is unpredictable. I, like you, feel that any downturn is going to be softer, and the economic indicators in the US and in Europe kind of reflect that. But I think what it means, Rainer, and I hope you'll agree, is that you have to be agile. You have to be ready for a downturn if there is one. You have to be ready for any shift. And that kind of loops back to what I said about you being forged in the fires of disruption. You need to be ready for whatever happens next. And if that's downturn in one of your markets, you've got to be prepared for it.
Yeah, you're totally right. You're right. I don't expect there to be a huge recession. And if I look into the projections, I mean, the projections are becoming better from month to month. I mean, there were between minus 1.7% and minus 0.7%. I mean, in autumn. And if I look now, they're even in the small positive numbers, like plus 0.1 or something like this. But it's becoming better. I mean, from month to month. So I mean, I'm really positive on that, and I think that also the industries we are in, and many of our will not be the most impacted industry. I mean, there's a lot in construction, real estate, etc. Yes, there will be. We see this because of the interest rates, but in the industries we are in, I'm really expecting a very moderate recession, if any. Okay.
Yeah.
So coming back, you are right. I think, and this is a main learning to me. I mean, you know that we've built KATEK in the way with the speedboats, and I had a lot of discussions over the last couple of months whether this is also the right operating model for the future, as we are becoming bigger and bigger. And I mean, in very small amount of years, we will be at 1 billion. So organically. So this means, is this the right operating model? And I am in the meanwhile deeply convinced that it is the right operating model, because I don't know whether I think it's a landmark book, the anti-fragility from Taleb. It's a super book, and I think exactly the organizational setup which we've chosen, the speedboat concept. I mean, that's a pretty good example of building an anti-fragile organization which has the resilience to learn in the certain industries, in the certain areas, geographies, on how to very, very fast adapt to the new situations, and to come out of the crisis even better than before, rather than be shaken and everybody is insecure, etc. And I mean, I think that's a model also for the future. And as we mastered now component shortage and COVID and energy and whatever, I mean, I'm pretty confident that the rest will also be beautiful.
Yeah, I think what's fascinating when I look at that speedboat model, and this was something I've been aware of as I've looked at the progress of KATEK. We spoke very early, and you spoke very much of this speedboat strategy, and we've seen this in the past successful with a small number of speedboats. But then we've seen people, as they've got larger, switch to the supertanker model, which I always feel uncomfortable with, because you're turning something that is beautifully agile and flexible into something that's a bit cumbersome. I think the trick is realizing, and I think, component shortages in particular will have helped you do that, is realizing, what do you need to centralize? What are best practices? What do we do that leverages our scale when we secure all these speedboats together and we move in one direction, but still maintain that agility that when you have got to do things, all of them can turn on a dime and do stuff really quickly. And I think that is, hopefully that's something that 2022 has been super informative about, and you can maintain that strategy and stick to your guns. I think it's really important to do that, because I'm absolutely certain there'll be people that say, hey, it's time to become this this kind of super corporate, and that becomes that can become cumbersome, can't it?
That's totally true, and you're also right. I mean, what we are continuously doing is to question what we need to centralize and what we need to decentralize. So I mean, we've learned a lot over the past year, and some of the things, like for instance the orchestration of systematic price increases to cover the cost increases on our side. I mean, that's something which was completely decentralized. And we've seen units where, I mean, this worked out beautifully, and others we were very, very reluctant because of the customer relation, etc., etc. And now you can see this in the profit and loss directly. And we changed this and much more centralized this with kind of reviews, etc., etc., and someone driving this centrally. And this is one of the examples where you continuously need to question, how you've done it before and how you maybe need to do it in the future in order to be more agile even.
Yeah, and I think that's excellent. When I look at KATEK, what I've always liked about Team Blue is this fresh approach, and I'm constantly keen to see how this new style of EMS is developing. So it's always a pleasure to chat and watch and see what you're doing, particularly in such disruptive times. Rainer, pleasure to chat to you as always. Thank you so much for your time. Thank you for your candor and your predictions for 2023, and I look forward to seeing you and speaking again soon. Thank you.
Thank you. All the best.